inflation has always been a bogey for the capital markets. And if one is a student of financial history and you look back, it clearly has been with us for a long, long time. And we have a chart that we've been putting up in some of our recent presentations that shows basically the decline in purchasing power of a dollar over a long period of time. So it's almost like if you want to say that the one thing you can count on in life is death and taxes, I would say that inflation at some level is another thing. And so knowing that that's really systemic, then we have to take steps to protect ourselves from the erosion of purchasing power that happens with inflation. In the last 15 years, investors have been fooled a little bit by a declining interest rate environment that has made bonds a very, very attractive investment. And actually, in the last 10 years, bonds have significantly outperformed stocks, particularly in the United States. But again, if you're a student of financial history, there are different periods where the bond market has been very unrewarding because inflation has caused erosion of bond prices and erosion of the purchasing power of what effectively are fixed income instruments. And so it's our view that to protect oneself in an investment sense from inflation, it's important to have exposure also to real businesses and real assets. And those would be represented by earning assets, companies that earn profits. And the history of the North American stock market is that in periods of moderate inflation, stocks actually do quite well, as they're able in many cases to pass through the price increases to their customers. And by the same token, it's the same as if you think of a commercial office building. Inflation does allow the companies to raise the rents over a long period of time, and in essence that serves as a nice form of hedge against inflation. If you contrast that with a fixed income security, the coupon is fixed, and in periods of inflation, interest rates usually rise, and then that creates stress for the values of fixed income securities. And then you've got this long-term overlay that the nature of government has been spend more money than they take in, and it ends up debasing the value of currency, which is largely unbacked. So we feel that having some exposure to the stock market and having some exposure to real estate is a natural hedge against inflation.